last time that OPEC unleashed a price war was late 2014 and into 2015 and 2016. And I know, speaking for the Canadian industry, it was devastating. We saw very low prices, 20, $25 a barrel, big layoffs. A lot of companies lost billions of dollars for a year or two. Are we looking at that same kind of a price war and its effects?
Yes, we are. We certainly are. Um, the Saudis are gunning for market share. They can drill wells, bring them online at less than $25 a barrel of cost. They know that the break even in the Permian is in the 65 to $75 a barrel range. They certainly know that they don't have to compete with any new wells in the Permian at prices less than $70 a barrel. So they're going to squeeze the U.S. oil patch and deliver what President Trump has asked for: lower oil prices, lower fuel prices.
Are we seeing a question or a case of unintended consequences where Donald Trump came into power on January 20th, drill baby drill, get prices down, and all he's done is, kneecap the domestic industry?
Well, that's exactly what's happening. The president knows there are about 170 million registered voters in this nation. He also knows that there are only about 2 million people who work in oil and gas, and it's the votes he's counting on. Secretary Chris Wright with the Department of Energy is releasing one video after another, and one has to probably have a little empathy for him because number one, the Department of Energy has nothing to do with drilling for oil or drilling for natural gas, nothing to do with electricity power plants and building them and investing. But he's the president's cheerleader on this.
Well, Ed, thank you very much. We'll get back to you in the coming months to see how this price war is playing out, but it doesn't spell good news for the North American economy.
Coupled with the price war, we've got a softening global economy. It could be a really bad second half of the year for the oil patch.